What are we going to talk about this week?
I like how fast we slide this week. I think the faster, the better.
So you like fast
Emotional,
pain, huh?
damn it!
I think I like that too. Makes my decision for me since I don't have time to think about if I should cut or hold.
Yup, I like the slaughter nice and fast. Anyway, there are some important earnings this week. We will talk about one that we are planning on getting if the price gets there, and the other that we don't plan on getting and why.
So the one we liked is ISRG. Check the screen for earnings report card. Overall, it's not a bad one. The problem is that its overall valuation is still too high.
Yes, sir. You are basically buying where it should be valued in the next few years. Looking at the day chart here with the M top, this is when the market was good and people are willing to pay for the premium pricing. But since the market has gone in correction mode, so naturally people will start with the overvalued stocks to take profit first.
Overall, ISRG's financial, company outlook, and growth rate are all pretty good, so no problem in fundamentals. Therefore, the strategy is still buying the dip on this company.
After market on Thursday, ISRG went to 280. Even at 280, the price is still representing PE over 50 if we use it 2022's forecast. I think ISRG needs another pullback of about 10 to 20% to be at a fair value.
We're not saying that ISRG will go down another 10 to 20%. We're just saying that it would be a fair value for ISRG now.
I don't have plans to add ISRG right now anyway. I think I want to see at least 15% pullback from $300, which is at 255 to start adding.
I was going to say the same thing. I see a zone between 230 and 255 that has been traded frequently, so that will be a nice support. Since that zone started around end of September of 2020 until April of 2021, where ISRG finally broke out. Those 8 months plus it's a 20% plus pullback from all-time high are two good reasons for me to add.
Oh, I see. Not gonna lie, that might take some time. But if we can get a 20% pullback on ISRG, that means the overvaluation would have mostly been clean. And again, ISRG is leader in medical equipment, and we love industry leaders.
Exactly. And what if it doesn't pull back? Then what do we do? Go
We,
ahead.
well, we wait. Always remember, money is in your pocket. It's up to us to hit that buy button.
And next topic we have is Netflix. Before we get into it, neither of us likes Netflix.
I hate it, but that is me. You guys are free to like it though, but damn, after earning, Netflix dropped about $100. I can't say I'm surprised by the job, but even that job is a bit too aggressive for me.
Please direct your attention to the screen on the earnings summary, and let's talk about why it dipped so hard.
The EPS beat here is partially due to a 104 million non-cash unrealized gain from euro denominated debt. Do you know what that means?
I'm not exactly sure what that means, but we can roughly understand it as it doesn't happen usually. So don't expect this for next quarter.
I figured. And the most important metrics for streaming company, the subscriber growth is 8.28 million globally versus 8.19 million. That is less than 8.5 million Netflix did in Q4 of 2020.
Netflix forecasted 8.5 million for this quarter as well, so it missed its own forecast too. And that's not the only thing that it missed its own forecast. Netflix expected Q1 2022 EPS to be 2.86, which was previously 3.45, and revenue forecast of 7.9 billion, which was previously 8.08 billion.
And here's the last straw. Netflix forecasted subscriber growth for Q1 2022 to be 2.5 million, where the estimated is 6. That's why the stock dropped 21% Friday.
Oof. If you really like the company, we'll recommend a buy zone now, but we are not buying Netflix, and we will explain why.
So the buy we recommend is at around 350 if you want on Netflix. We would wait.
We don't want it because we don't consider it as a growth stock anymore. Sure, it's a good company and has consistent cash flow. Streaming space has become too crowded.
If we use Netflix own forecasted earnings for 2022, The stock at $400 is probably fair value, not high nor low. We consider it value price. The only problem is market consider it a growth stock or it is still in growing phase.
That's why the market was willing to give it a premium valuation. People are expecting it to grow a lot every year. But looking at its Q1 forecast, investors are like, wait, hold up, you might not grow this year.
Yeah, they are not losing money though. They are maturing. That's the worst fear of a growth company, that they are maturing.
So if you think Netflix can still grow and it depends on how Netflix Q1 earning looks like, then you really should wait until 350.
I agree. The logic is pretty simple, like we mentioned before. If Netflix can maintain its forecasted growth for this year, a fair value at the end of 2022 is about $400. And this week's Netflix basically closed at 400. How you gonna profit if you buy here, right? At the end of the day, you need to clear some space for your profit. And since you want to assume the worst, right now is definitely not the time to add Netflix.
Peloton is temporarily halting production of its fitness products to control costs because not a lot of people are willing to spend thousands of dollars on a home bike.
Yep, their share price dropped 24% for the day, and they took the whole market down with them.
No, they didn't. But the market did start dumping after the Senate passed the antitrust bill on large tech firms like Apple, Amazon, and Google.
Yep, the bill would prohibit big tech from favoring their own product or services, disadvantaging rivals or discriminating among businesses that use their platform in a manner that would materially harm competition on the platform.
So, what does that mean?
For example, Apple and Google could not unfairly rank their own apps higher than rivals in their own App Store and their general search engine.
And I guess for Amazon, they could not simply decide to list their own private label products higher in its search ranking than their third party sellers.
If I could remember correctly, this is probably the first big tech antitrust bill I ever seen since I started trading. Anyway, let's talk about Friday's close and a little about this week's price actions.
Overall, market continued their dumping momentum on Friday, closing near the lows for the day. The Nasdaq dropped nearly 2.5%, weighed down by Netflix shares which fell over 20% on the day. The Nasdaq is now down nearly 12% since the start of the year.
Meanwhile, volatility continued to climb as well, with the VIX volatility index of about 14% on Friday to the level of 29 and up about nearly 70% for the year so far.
Let me tell you, my account doesn't look pretty this week, and on the bright side, we are finally having a decent pullback to load up on some favorable company.
Same here, we wrapped up the week with the Dow down about 4.6%, S&P 500 5.7%, and the Nasdaq being the worst one down about 7.5%.
Fed meeting is scheduled for next Tuesday and Wednesday, January 25th and 26th. Most likely, they are going to talk about the end of its balance sheet tapering program in March and the beginning of its rate hike cycle. What else?
Probably they're going to talk about how they handle the recent economic softness impacted by the Omicron variant and inflation, etc. The market is now slowly pricing in the expected 4 rate hikes this year.
I think there is no hawkish surprise in this meeting next week based on this week's market performance.
I doubt this pullback is complete in the near term, but the broader path in 2022 is still looks to be a positive one, at least for us. What do you think?
Personally, I don't know when the pullback will stop, but I think the big direction is still bullish. So all I'm saying is I'm buying dips.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.